This is the Dow Jones. Today's date, 2/19/2011. This is for our worldwide international trader network update. Also for MMTs in the MMT apprenticeship year, and also for the broader hedge fund management communities and things that they should be looking at, and people that we know and work with. Now, we've had a 4-month monthly buy signal here. What I'm going to point out on the Dow very quickly, we're at 92.91% overbought. That's a standard percent DS. The MACD, which is a moving average convergence divergence, a lot of people put a lot of weighting on these standard technical indicators. You're at 369.11. And we have a mathematical formula that I developed over the years for market tops based on what the broader public and looks at. And everyone is the public except for the people who run the exchanges. They're not the public model. You are. And the thing about it is, their way of doing business is that on the Dow Jones, it's 30 stocks. Their earnings have ran good. The 8 quarterly earnings cycle has done extremely well. The problem is that we're running up here into the point of no return, where pullbacks and corrections start to occur, which is healthy for the market in the short term for the bull. The bull won't like it when it happens, but we're not too far away. What I am going to do is point out some highlights that back up over here where that we're going to be looking for, and this is a monthly chart, 200 monthly chart. This is what it will look like. We'll put a top in. It'll be a narrow range monthly top. This month is February. It's not over with. It's bullish monthly buy signal, and you can see what happens when these monthly MACDs start to descend. Your trends go with it. When they start to put in their bottoms where the great buying opportunities are here, and they start to ascend in value, we go up, and we have re-levered down. And we have re-levered up over the last 2 years. 8 quarterly earnings cycles. Earnings have been good. They put in their bottoms. Yields were good outside of the country and global markets around the world. One of the things that I'm going to highlight here for the Dow is we just so happen to be right here. That's what we talked about a couple of weeks ago on stockmarketfunding.com site with the analysis, is that when we got above there, we would continue to see that move up. Here's the top of that monthly bar of where that 2008 trend had started to go down severely, right here. This is going to be 12,623. We closed at 12,390. We closed at 12,391.25. We are in the very short term overbought. You can stay overbought just like you can stay oversold. You can stay overbought like we told people, and it's worked well. We couldn't break the bottoms here. This is back a year ago, 2-1, going into this, setting up for a spring rally. We sold off in the Dow. We moved up. We tanked up. We haven't looked back, but we're not saying there's nothing bearish about this. We're saying, though, that the overbought cycle is here, and it's going to be time to bring the cash register for the big people, big institutional traders. There's a time to sell. There's a time to buy. There's a time not to hold any longer, and we just happen to be running into that period. And it's been a great rally. It's been a great move on the Dow. It's been good for everything. We put the bottoms down here. We've had a 4-month buy signal. When I go back over here in time, these monthly buy signals only occur every so many years. And you can see clear back here in 82, when the bull market started in 82 on the Dow, we had the monthly buy signals. It was a different time period, but we stayed monthly. And then we peaked, and we had some corrections, and then we peaked right here. And boy, did we have some nice corrections right here to the 2002 bottom. When we levered on up, we've had increased money flows come into the market. International markets, emerging markets have ran their course. They're inflated. U.S. is a safe haven. That's why we've come this far, and that's why that money side and those money inflows are coming in. They always do it that way. Remember, they got to pull the money off the sideline to take it like they did here. And yes, within the financial crisis that started, they go both ways. They go down, and so you got deleveraging and releveraging. And we're going to hit, in 2011, we're going to hit a peak where the releveraging process in the Dow earnings the yield just isn't going to quite be there. They're not going to collapse in the earnings right away. It's just that it's going to be hard to beat some of the numbers. And not only that, when things are getting heated up as they are around the world, that's another story and another analysis, okay? And we'll be covering that in depth, particularly in our SMF Stock Talk radio show. I would look for that event. We're overbought. We're going to have a correction. What I'm going to do is I'm going to show you the difference between the Dow and the S&P on a weekly chart. Here we are on a Dow weekly chart, Dow Jones right here. What I'm going to show you is a standard technical analysis that people make decisions on where 97.2% DS overbought. You will not stay up here. It's impossible. Anybody want to bet me? I'll bet you any amount of money. And we're extremely overbought there. The MACD is at 421.45. Brian Plain, we're going to Excel this out here. And we're going to Excel out the 10-week moving averages here. What I'm telling people is that we have had a great rally. There's nothing bearish about the chart. We're right for a pullback. Now, when I show you this chart here, I'm going to see if I can overlay. Here's the S&P 500 on a weekly as well. Compare it to the Dow. 96.5% overbought. The Dow on a weekly level, 97.2%. If you are an innocent investor and you ever do come across this video short term, it's time that you don't be exuberant. And if you've had a gain, it's time to think about to sell. That's entirely up to you if you're an innocent bystander ever watching the video. Because if you don't, you're going to pay a price. You're going to give up some of your profits. I'm not putting a buy or sell recommendation, but for our group here at SMF, it's time to get ready to get net short. And the Dow is overbought. We can still come up to 12.579 right below that 12.6 handle. This is where that Dow Jones started its correction in 2008. We have had a great move in 2009. We continued that move in 2010. 2011 on a weekly level is where we had the breakout right here on 1/2 of 2011. And we ran a course in cycles where the bigger money is going to sell. And the thing about it is, if you've had some great gains and you were able to withstand